Hello, retail traders. This is the Sneaky Snake Trading Strategy with Washboardjim, where we talk about chart patterns, moving averages, and being in the now. And right now, we're being in the now. We definitely caught the bottom by being in the now. We've been watching the market real close. We've got a tight knit team that kind of checking each other's backs. And I sit here and I call out the plays, or I at least alert a few of them, and we're all alerting different things that we see. And we're going to talk about this coming week and what I see. So this is the /ES. We're going to talk about the indices right off the bat, how we call them out here. A couple weeks ago, we called it off the 300 SMA right down here. This is /ES. We have the 200 SMA, which we called out, boom. And then we had the 3 black crows, we called that out, boom. And then we had this last pullback here off the 300 SMA, which we called out, which again, we had 2 big engulfing candles with a huge spinning top off of the 300 SMA. And she went ahead and bounced on up and broke resistance. This chart tells me a lot. It tells me that we're very bullish, that people definitely want to buy the dip. I mean, this is an excellent trade, and it's looking extra strong. I have the CCI down here at the bottom. I have the volume, and I have this set up in a TTM trend setup right now with my moving averages on here. Let's bring this up to the daily last week. We had this big, huge breakout. And I like pulling up the 20-day when I'm first looking at them. And you can tell we had that pullback. And then boom, here on Friday. Each one of these equal a day in a 1-hour time frame. So she definitely broke the 20-day resistance and created a new high. If this does pull back and find support, it'll find this previous high right here and hold. If not, then she'll dip on down. So I'm just going to go ahead and draw in pivot point areas where I think the stock needs to hold to stay bullish. And we're going to go ahead and draw a price line right across the body of that candle right there where we had that tweezer top with a double top break. And that's right at 44.10 to hold. And that's going to be /ES. Now there's other stocks on here I want to talk about. Whoop. Let's get back up here. There it is. We got the VIX. Definitely had a double bottom here on the 14-day. So if this thing starts to bounce up, we could have a pullback. Resistance is going to be somewhere in the pivot point area right around 17. And then support will definitely be that 14, 13 low. If it keeps dipping, we're going to keep moving up. So that's kind of saying we're in correction territory too. Then we got the SPX. Beautiful little breakout on it. Pulled back on the 20-day and hit that 1 hour. Now if you pull up the weekly time frame, and we got this 21 that we got resistance as, that's going to be your support for next week. If we can stay above that 21, then we're still bullish. And we're going to draw a price line right across that 21 for right now. And it's going to be right around 43.95. No lower than that. And that's for the SPX. So that's about a $20 dip. And it could dip a little bit more. But I'm just saying that's going to be our pivot point area. If it doesn't hold, we could drop down and hit the bottom part of this candle right here. Right around 43.60. Now, mind you, this is on the weekly. 43.62 with a resistance to break somewhere right around 44.25 area. And that's going to be the SPX. SPY, or the Dow Jones, also got that 21 as a resistance line. Now I called this out last week that's what we had to break, and we have broke that 21 barely on all these indices. So I mean, It's telling us, the underlying indicators are telling us that we're bullish. But if you listen to people, they want, they're saying we're a little bit overbought, which it does make a lot of sense. So it'd be nice to pull back. If it does pull back, I want to use the 9 as a support level indicator to hold on this stock on the Dow Jones. And that's going to be, let me go ahead and put a price line in here, somewhere right around 337.88 to hold. That's going to be the 9 EMA. On the weekly, the next one, SPY, it's also in the same boat. I think it's the 21 that we had to break. I called it out last week. Let's clear this up and look. We broke that 21, so now that becomes a solid support. Mind you, again, this is on the weekly time frame, so we want to go ahead and use this as a pivot point area for next week. If we break below, let's say 438.50 area, then we're going to use the 9 or the bottom of this here candle as your first support, with a strong support at somewhere right around 431. So just keep that in mind. And resistance to break will be this top of this candle right here, right around 443 area for next week. And if that breaks, then we just keep moving on up to the next 3 candles. Maybe up here to the shoulder line of this Head and Shoulders. I know it's hard to see, but there's one there. So that's that one. The QQQ also had a good pull in on Friday. We're definitely at a resistance line. Hard resistance is going to be this here Head and Shoulders right here. And this is on the weekly time frame. And we're going to draw a price line right across that resistance line. Now we have a double top right here. So that's going to be your first resistance. And we can't magnify that up, so we'll put this Head and Shoulders on here. Let's do this. Start fresh. That's going to be I don't think that's a major catalyst, but that's definitely a support or a resistance to break. And if you can hold above that next week to 377.72 and build upon that, we're very bullish. If not, she'll drop down and run off the 21. We clearly broke the 21 on this last week. So now the 21 SMA becomes a solid support to hold. If it doesn't, then we become very bearish and we have a major drop. Resistance to break is going to be right up here, right around the 383 area. So support needs to hold at 367. Now I'm doing this just on the weekly time frame. I had some goon on social media laugh at me because I was charting up a 1 minute time frame. All he did was make a fool of himself. A well-rounded trader will look at all time frames and find a meaning out of every one of them. I've used all of them. I've used monthly, I've used weekly, I've used daily, I've used hourly, I've used 15-minute, 5-minute, 10-minute, 1 minute tick. I've used them all for a lengthy period of time. So when I'm scalping, I use the 1 minute. And I've already looked at the other time frames. So basically I go through, if I'm looking at a stock, I might go through 6 or 7 time frames before I even think about buying the stock. Especially any new ticker. But ones I'm familiar with, I already memorized them. I kind of know where they are. But yeah, definitely. When it goes to trading, I'll pull up that hourly. I mean, that's the one I use the most. I can day trade off that real well. Or I can swing trade off of it. And I can scalp off of it if I want to look for a major support level. So yeah, different time frames. Well, you got to be able to use different time, because you could find a trade on one time frame and you might not see it on another time frame. But if you move it to a different time frame, oh, you're saying, oh, this is a nice setup. But I didn't see it on the 30-minute. But man, I'm looking at the 5, or I'm looking at the hour, and I'm going, this is a double bottom. Oh boy. Spam, wouldn't you know? Okay. Technical difficulties. We had a spam phone call. So yeah, it's good to use different time frames and know how to trade them. Any time frame could give you a different idea for a trade. Maybe a different time frame could lead you into a trade right then, to where if you looked at such and such time frame, you say, oh, it's just not ready right now. So it's all about how you want to trade. And the IWM, here's another one that's oversold. If we ever break the 300 SMA on this one right here, I think we're in for a higher high, to where you could probably swing this up to 196. But we'd have to break this 300 right here, and that's right around 175. For right now, you could trade it in between that and find resistance, and maybe call the new resistance to break at 174.37 and set some kind of alert to get into the trade, or maybe set an alert to buy the trade down here at 166.45. I'm going to go ahead and set me an alert, because I think that's a nice setup. We'll just wait for that 166.45 this week on the IWM and see if we can't break two resistance levels. One of them right here. I'll go ahead and put that in 175. And then the other one will be right above it. So I've got that one set. Now I might take this trade if we have a good day and it pulls back, and I can get a little bounce back up to the upside and run it up to 171.75 and see if that breaks. If not, 174.37. If it does break, I mean, I can still, that's still a trade. Now this is on the weekly time frame. Now let's say I looked at the 1 year daily. I would say this looks to me like it's getting ready to squeeze to break to the upside, and that I might not have the opportunity to pick it up at 166.45, that I might have a better chance of picking this thing up at 167.66 if we have a little pullback. So I'm going to set an alert off that, and I'm going to type in second support. I'm just looking at different ways of trading it. See, different time frames could give me different ideas to trade a stock. And resistance to break would be right here at 169. And I'm going to type in resistance to break. And that's just on the daily. Now, if I look at the 1 hour time frame, it could be a whole different trade idea. Because if I look at the hour time frame, I'm looking at a bull flag, and I'm looking at resistance to break past the 200. And if we break the 200 here, I'd run it all the way up to a double top. So definitely that 169.90 is a major resistance to break, and something that I would love to take the trade if it did break the 200 on the 1 hour. And again, set another alert. A different time frame, again, I'm telling you, can give you a different trade idea. For example, the IWM, if I wanted to take a triple bottom down here, I'd set me an alert for a triple bottom. Extend that out to the right, and then set my alert right there, maybe for a double bottom here of yesterday's low, and take that trade off yesterday's low. So create another alert there, title it yesterday's low, or Friday's low. I mean, if that thing pulls back Friday or Monday tomorrow and hits that Friday low, that'd be like a triple bottom. You have a wick, a body of a wick, and you call that a triple bottom Friday low. And that could be a very nice trade on the IWM come Monday morning. If we pull back and we stand right there and take it and run it back up and scalp it back to the 200, which found resistance right here. So that's another time frame, another way of trading it. Now let's change it to a different time frame. Let's go to the 4 hour. Now the 4 hour, this is telling me that we have an inverse head and shoulders. I could take, once we broke this inverse head and shoulders past the 200, I'd want to take it and run it up to this 300 right here at 174.37. That's the 300 SMA. So that's another way of taking this trade. I'd take it once it broke this shoulder line right here. And this would be an inverse head and shoulders, a totally different time frame, which gives me a totally different trade idea. Or I could take it to the 5 minute, 5 day. Now I'm already set up to take this at the 5 minute, 5 day. I do already have a triple bottom right here. So maybe we have an expansion pattern. This is how I would look at it. I draw out the expansion pattern. Totally different look. This is 5 minute. I'd extend that out to the right, and I'd take this and I'd extend this out to the right, and I would set me an alert down here in case we knifed and pick that trade up here on the 5 minute time frame. Or I'd pick it up after we broke resistance, because I think we'd hit resistance and pull back and maybe take it off the 200 on the 5 minute time frame. So that allows me to take a totally different trade. I take it to the 1 minute. Now this is how I trade. I come in here first thing in the morning, Friday, this is exactly how I traded it. Come in here Friday. I don't want to get rid of this, but I'm going to. 167. You come in here Friday. Now look at what happened here when we called this trade out Friday. I'm telling you, I've got one of the best strategies there is. This is called the snake, and then you broke out into what you call an expansion pattern. This is called a wumbits, tubus, and a freebie. That's dog talk stating wumbus means one, tubus means two in dog language, and freebie means three. So you got 1, 2, 3, boom. So you have an expansion breakout pattern here. Come in first thing Friday morning, and we got that third bottom. I call this a triple bottom breakout. Boom, to the upside. Resistance is the expansion resistance pattern. So you know to get out right here. Once you hit resistance, there's your idea to get out. What happens when you hit resistance? You know, she comes back and retests. Ummits, tibus, and then the pivot, 3-bit. She finally failed. So that's kind of what I'm saying. Every different time frame can give you different ideas on how to take a trade. You just got to look at different time frames. Maybe all of them look like, hey, I can get a trade here. Oh, man, this looks good. I can get a trade off every time frame here. I mean, that's positive for the stock itself. So as we go through that, I just wanted to kind of point that out. I just snuck a little trade strategy in. It's called the 1, 2, 3 out of the snake. You look for a pattern once it breaks out of the trend, and you find the pattern. It can be any kind of pattern: an ascending triangle, an expansion, a falling wedge, a triple bottom, a double bottom, maybe inverse head and shoulders, maybe just one engulfing candle that would turn into a J hook and bounce back up off the bottom, then create some kind of head and shoulders. It's the pattern that comes out of the snake is what you got to look for. And if you can count to 3, you can trade with me, okay? Let's not forget that. 1, 2 bits, 3B right out of the gate. You know that it's going to either break out or pull back. Pulls back to the 3rd step. Vomits, Tibbets, and freebie. And then she breaks out to resistance. It either gets into this channel or you get out here off that 1, 2, 3, 4. Just up. Now to keep finding trend off that line. Now another thing I like to do when I come in first thing in the morning on Monday. Now we've gone through the indices. I showed you a little lesson here on time frames. Where I stand is the technicals and everything's telling us that we're bullish and to play the dip. Now, if it would take a circumstance. Now the Fed, they're using the Fed, prolonging the Fed rates. It's been prolonged. They've been saying it for months. They've been saying it all year. The market ran up. They're using it as an excuse now to maybe consolidate. We had a good sell-off already. Please keep that in mind. I think we're due for a Santa move and then a pullback into 2024. Come back to our census. Now the volume picks up this time of the year. Kids are back in school. The winter kicks in. People are at home, not out as much. More online shopping. So there will be a lot of traveling going on. So definitely watch airlines. Keep that on watch. Airbnb. We got Boeing on watch. Watch Boeing this week. Oh man, watch Boeing this week. Mike brought it up in the room. I brought it up all week. I mean, this thing's way oversold. We had a breakout. I mean, I'm fired up on Boeing right now. We're definitely set up into 2 different kind of patterns. We've got a inverse head and shoulders. We got an inverse head and shoulders, and we got an ascending triangle. So this thing's ready to break. If she breaks resistance, which I think is going to be the 65 EMA, that's the 65. If we break the 65 on the daily, I think we're off to the races. Back to the 200 at 208. Now we've got a resistance between 208 and 212 to break, and that's the bottom of this wick right here. And if we can break that, we can run it back up to 220. Now, like I said, we got to break that 65, and we can find the bottom of that shoulder line on this head and shoulders to be support. And right now we're going to count it to be off the 9 EMA on the daily time frame. So set an alert right there off the 9 for support level for next week. That's Boeing. I think this will be an outstanding trade to go long in. I'm going to show you one more clue here on what to look for when you're coming in the morning. And if you have toss, thinkorswim, which is now Schwabi, you've got a nice little market maker watch list to go off of. You go in here, right click it. Well, what happened? It doesn't want to right click. It's all right. It's left click. And I think it's right down here under F and N. You go down to market makers. And that's a nice little watch list you can go off of. We got Tesla on here. I called out Tesla last week. I mean, this is a very charming trade right now. Tesla is. We bounced off an inverse head and shoulders on the 20-day. Boom, 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 bam. Right up to that 300 again. So yes, I mean, she'll pull back maybe and retest that support level again because you are descending. And if we break out, it's back up to 220. AMD's on the list. Nice little breakout. We called off AMD. Very nice little breakout off AMD. Apple, same thing. Apple's been on a great run. Apple had a huge breakout out of the flag last week. We traded it. You got Amazon, triple top. Inverse head and we got a head and shoulders. Then you got double top here on Intel. These all could pull back and then bounce back up and have a third time break. We got Pfizer in the red as it pulls back to a new low. Might be something to watch. Bank of America. Now this is all in the market. These are volume leaders. So I'll look at them top volume leaders and see if I can find a trade. And then I'll go to the red one and I'll look at the red ones and see if I can find something that I like to trade. Like we got a double bottom here on this one, and I would want to see why. Check the RSI out, maybe. I've got Merck on here. This is another one. We got a triple bottom with an inverse head and shoulders. Called this one out last week. Merck. Pfizer's on here again. All these should be, double bottom on Johnson & Johnson. I don't know, man. These look very charming to me. For long. We look at the 3-year. Oh, gosh. I mean, yeah. We got a 3-year low down here. I'd be watching them real close. And then Baba. Coca-Cola. And then if that's not good, I like to look at the ones that broke out. TSM. We got AVGO. Had a big breakout. I called this one out last week. AMD had the big double bottom breakout. See, this is what you look for. I want you to check this out. Snake, breakout, pull back, double bottom off the 50 SMA. Tweezer bottom. Yes, called it out. Yes. Those are chart patterns. They don't give a shit about the news. But it did bounce up off earnings. But you got the snake breakout. Watch. This is a weekly time frame. So you got 1, 2, and the third body. One body, two bodies. Not a body here, not a body here, but a body here. Broke out. Now I'm using, hey, that guy out there that said I don't use a 1 minute time frame. I'm using a weekly here, so don't tell nobody. Especially Joe Biden. So there's your 1, 2, 3. Yeah, I take it personal because they don't have a clue. People that assume don't assume. You know what people that assume are. If I can get this in here, one of them, 2 bits, and then we broke out on the third one, so we caught that. Now we now wait for the pullback. So we got the pullback off the 50, which is another catalyst to take this trade. So tweezer bottom off the 50. Tweezer bottom off the 50 SMA. Then you'd know to take that trade, run it back up to resistance and get out of it, which would be right up in here, somewhere around 115. So that would have been a good trade to take, AMD. And we called it out in the room, and I said I ain't going to take it off of earnings, and then we dipped, and then we had the big breakout. Earnings came, we had the big knife, and then boom. So that would have been a good trade to take for a swing into earnings. If you were in shares or even if you got a week out contract or two. AMD. So where were we? Weekly. So this is a bull flag. And you could even tell the bull flag was bullish. So once you came back, hit that 50, boom, back up to resistance. So now it's got to pull back, and we've got our alert set. We got to hit the top of this yin yang. What was support now becomes resistance, now becomes support again. So we wait for that thing to pull back and catch it off the 21, this white line, and run it back up to the upside and scalp it or day trade it. So again, you look at different time frames differently. That's how I would trade that to look at a swing. I would set it up that way. And I would also maybe even wait for the 106 for a strong buy and run it back up off the 200 on the 1 hour. Or take it off the 5 minute at 116 for a scalp or a day trade. If it pulled back right in the morning, first thing in the morning, and bounced off the 5 minute, I would surely take that trade. Same thing with here. I bet you if we pull this and draw that support line on the bottom of that double bottom there, and that would be a triple bottom. So on the 1 minute, I would look at this for a support level, and I'd call it, I'm going to look for a triple bottom hold at open. 116.60. If that holds and we start to go sideways, I'm going to buy it small. And if we start to break out, I'll add on. Or if we pull back, it was going to be a nice couple dollar dip. I might want to get out of the trade. But I think we could pull back and hit a triple bottom and bounce back up. This is AMD. Someone asked me, he said, "My earnings weren't that. Why is everybody liking AMD?" Well, if you listen about being in the now, if you listen to the analysts, they were all talking about AMD, saying, because everything's sold off so much. Everything's sold off so much. Look at this. This is what we got to understand here. We had a 5 or 6 month sell off into earnings. It can only go on so long. So when the analysts are talking back and forth, they're saying, damn, we're down here to a double bottom, folks. We're down here to a double bottom out of this snake. We got to start paying attention to this. I mean, we found support. We found support. We found resistance. Support, support, support. These are daily candles. This went on for a whole week. Support, 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 support. Support, 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 support. It was screaming, saying, buy it. You ain't got too much of a risk to take here. Because you've had a 6 month sell off, one. You're at a double bottom, two. And the market's had a hard sell off for the last 2 or 3 weeks, couple weeks. And we consolidated for 5 days in a row at $96. So everything was telling you to buy that stock, to go long. Double bottom. Boom. You got a snake. Again, let's make this real simple. Let's make this real simple. You got a trend line of resistance which creates a snake. You all of a sudden start to break out of it. So you broke out of the snake. You didn't break out of it here. You didn't break out of it here. And then 3 months later, you broke out of it. So you broke out, you had snake breakout, pull back, double bottom, boom. Now that's on the daily time frame. Weekly time frame. Double bottom on the weekly off the 50. So every time frame can give you a different kind of trade idea. And that's it. Market maker watch list. Something to go off on in the morning to get started. Watch your indices. I think we're in for the market. Everything, the fundamentals are saying bullish because we broke a resistance barely last week, or we had a fake breakout and we're due for the pullback. Now all the real good experienced traders are skittish and a little bit surprised of last week. I wasn't. I more or less called it out pretty good. And we did break the resistance that I talked about, which was the 21 SMA on the weekly. So that just tells me that I have to be more hawkish than bearish, But if you're a Fed and the market looks at it like they're going to feel like, hey, we're not done enough. The Fed has no clue what's happening. It's like we're in two different pastures. One of them's all dried up and the other one's out grazing, creating a whole different climate, a whole different economy. And they're basing their traditional mathematics on something that happened back in 1970. And they're behind the curve. And they will not get ahead of the curve until the government cuts spending. Now we've got the pros and cons. Is we got a war, which is the con, and the pro is that there's going to be extra spending. So that keeps me kind of momentish in the market, bullish. So the any knife that comes in, we just got to play it slowly and patient, and there'll be great opportunities to play the dips. And that's the way I'm playing this market, and I'm making spreads are crazy. $1,000 points, $1,500 spread on the SPX. You get in at $300 and sell it at $2,000. Hello. In one day. Either way, but mostly when they go up. So we come in here and we have 3 bad days. We go into the 3-day rule, which we played last week, worked perfect. So keep that in mind. We'll catch you all later, retail traders. Let's kill it. Sneaky Snake Trading Strategy, where we talk about chart patterns, moving averages, and being in the now. Hit that like, subscribe, come join the chat. It's in the link below. Donate to the scanner. I don't know if it'll be updated here or not, but yeah, I need all the help I can get. We'll catch you later. Bye-bye.